Markets shifting, signals colliding. Are we on the edge of a bigger move? Welcome to Daily Market Waves, where every candle speaks and every wave counts. Today, we ride the pulse of a changing market. Volatility, coiling or collapsing. Dollar index, ready to confirm its bottom. TLT and yields, bonds are talking. Will stock finally listen? In commodities, we dive into gold and silver. Finally to the moon, or not so fast? Oil and natural gas, prepping for the next explosive move. Will they be in the same direction? Special feature, wheat, a deep Elliott wave and candlestick breakdown you don't want to miss. Plus, a multi-angle technical read on SP 500 and Nasdaq, trend or trap. Sectors and large cap stocks, clues hiding in plain sight. And a spotlight, Nvidia and TSMC, leaders or laggards in the next cycle. And a massive thank you to each of our 10,000 subscribers. Your support fuels our mission to deliver precision, clarity, and edge in every wave we analyze. Now let's talk about volatility, our usual starter. So what we are seeing here is technically the index formed a bullish candle and quietly climbed above the 50 days moving average, while the futures also formed somewhat neutral candle, and right now it is still holding the 50 days moving average but below the 8 days EMA. Speaking about tomorrow, it's not quite clear. The picture is not quite clear. Slightly bullish, I would say, considering several technical signals. But if we look at the weekly frame formation, that what is going to be closing tomorrow, there is no consensus yet. From the perspective of futures, it looks like the picture is much more clearer. So if candles look forms like this within the body of the red green candle, we will have a rising 3 method setup. However, for the volatility index itself, it needs to rally a little higher, potentially about 19.25 in order to make a bullish formation. So the chances for the bulls overall are slightly better. However, everything can change. Let's see what the other instruments and asset classes are telling us. And we will talk about dollar index. So today, dollar started the day with a fairly strong bearish move. And at some point I thought, well, that's probably going to be a bearish engulfing and this is it for a rally. However, by the end of the day, it looks like dollar has recovered and now it is facing only a bearish harami, which is way weaker compared to bearish engulfing. And now it requires a strong confirmation and so on and so forth. So it's not, the picture is not as clear. Speaking about the weekly frame, last week we had a very strong bullish engulfing, and today's week, if it closes with the candles like this, that could technically be a doji, but I would say it will likely be a neutral one if it stays like this. Even if it turns slightly red, it's still gonna be a neutral leaning bullish. And of course, the final day of the month on March 31st will be a decision maker. So dollar needs to close above 105.42 in order to make a bullish formation. Well, now let's move to the bond market and listen to what candles are telling us here. So the picture is rather concerning for those who are waiting for lower rates. What we have here is 20 and 30-year yields. They produced clear bullish continuation candles and with very good chances to move higher. If we look at the different frames, for example, the 2-day frame is also on track for a strong bullish closure. The same for 3-day frame, which is closing tomorrow. The most interesting is the weekly one. If the weekly frame closes above the high of this red candle, and I would like to mark it here. This is the level, and exact level 4.705. So it's going to be 4.705. This is the level 4.705. This is the level of a decision making. So if the 30-year yield closes above this level tomorrow, it will technically forms a very strong bottom, and we will be looking for a rally starting, continuing a much higher, perhaps towards 5% or even more. The somewhat similar situation is for the 20-year yield, which is an inverse counterpart of TLT, and the somewhat similar formation for 10, 5, and 2-year yield. They are slightly behind, but they are on track. They are also moving in that direction. So that's the level to watch tomorrow, and this is a big concern. If it materializes, well, let's see what happens to the rates. And this is our 20-year yield. 20-year yield Elliott wave formation. What we are talking about is potential move higher towards this target area 4.88, 5.12. That's the target for our wave 3. It could be higher, but let's be modest. Let's see how it climbs here. So far the wave has been impulsive. And now let's have a look at TLT. So TLT is quite the opposing wave here. What we are seeing is an impulse going down. Whether this impulse is part of the purple count, and this is a wave C, or this impulse could be a wave 3 of a much bigger impulse, of an impulse of a higher degree. Well, both counts are on the table. And we discussed this one starting at the beginning of March. So far, nothing changed. These two are our perspective. Obviously, the purple path would be a lucky path, I would say, but we cannot reject the red one at this moment too. And let's have a look at what kind of support TLT has from the candle's perspective. So remember our get out call on March 20th. Since then, TLT lost over 2.5%. And today's green candle, well, it technically could be a morning star candle if it gets a very nice confirmation tomorrow. However, if we look at the bigger frame, for example, this is 2-day frame, and we discussed this double top formation a while ago. Well, it is falling, and this candle represents just a bearish continuation candle, with 87 being the target for the double top formation. And an interesting thing on the weekly frame that is closing tomorrow, if TLT stays like this and closes below the low of this green candle, let me mark it here. Low is 89.26. 89.26. 89.26. If TLT closes tomorrow below this line, it technically forms a top. It confirms a multiple Harami candles, and this is quite a strong combo. A move down would be almost guaranteed, either immediately or after some consolidation. Well, that's all for TLT, for the bond market. Now let's have a look at commodities. And we will just have a look at some of them, what we are looking. So we will talk today about oil, about natural gas. If you watched our uranium update about uranium stocks, it is healthily falling down, and there is no question about it. And this is something that we predicted a week ago or even earlier. Just look for uranium stocks update on our channel. And we also, I think we mentioned it in our last weekly video. So no surprises here. Wheat is a special feature of the day. We will talk about it in just 5-10 minutes. Gold, silver, and by the way, if you're following coffee, I think coffee confirmed a reversal here and has a good chance to fall lower, especially after breaking 50 days moving average. Yeah, if I have a chance, maybe I'll share a coffee update, like a deep dive on coffee in the next couple of days. Well, now let's talk about silver. So what silver candles are telling us? So technically, everything is green, and I don't have any concerns. If silver closes the week with these candles, technically they will be bullish, and there is a very good chance for seeing higher prices tomorrow. That's the candle perspective, and well, we have reasonable technical support for this move. However, the interesting things start when we start looking into Elliott wave formation. So we discussed it already that the last wave that started in the end of February has been formed as a diagonal because of this overlap here, and the chances for either completing the red count or the blue count are still very high. The question is this level, 34.863. If silver moves higher, it will form a diagonal, and potentially it's even going to be a bigger diagonal, like in the green count or any other. But this would be a stronger move, and I would be expecting a stronger counter move for this one. If silver doesn't make it and gets a reversal candle, it might get wave 3 here and a move down. So I would say that silver move upward is fairly limited. We have one potential diagonal or corrective wave here, another one corrective wave, and well, it might make another one in the next couple of months, but then the fall will be epic. Well, that's the perspective for Elliott waves. And if we look at SLV Trust, so today it rejected this bearish engulfing that's formed yesterday, and the candle is green, and the 2-day candle is also green, back bullish continuation, and so far the weekly is tracking for a bullish closure. Now let's talk about gold. Gold, I have a few concerns about it. So technically, this is the green candle, and the 2-day candle also bullish. We should be looking for higher highs. The only concern I have here is that gold has been oversold on multiple overbought, pardon. It has been overbought on multiple frames, and it continues to do so. And this is another concern. This is divergence on RSI, daily RSI. So it made a higher high. However, RSI failed even to go above 70. That's a big concern, technical. However, we are not seeing any reversal signal yet. So, but if it appears in the next couple of days, it might be a very significant one. And speaking about the weekly closure, I highlighted the red line here. Gold needs to close above this line in order to maintain its bullish perspective on the weekly frame. If it doesn't, the odds might flip bearish. But we will see how it closes tomorrow. Speaking about Elliott waves, we've been talking about this wave for a while. It's the beginning of March, so it looks like this wave is done or about to be complete. And an interesting point, so I think that the blue count can be scrapped for now, and also the red one is not valid anymore. So what we have left with is just the potential green count, and right now it is most likely an ending diagonal because of so many overlaps, and I would say this is probably something like this. So this is wave 1, 2, 3, 4, and we would be looking for one more wave higher, wave 5, and this would be a very interesting formation from my perspective. So this is what I am right now looking for: potential ending diagonal 1, 2, 3, 4, 5, because of so many overlaps, and there is no impulsive wave here. Well, if gold makes it like this would be a decline, like an immediate one towards 3000, or perhaps lower, but we will be tracking it, and we'll see how it completes. So far, this is the plan, and I would say that this wave, if we follow very classical Fibonacci level, so it should end somewhere here, and it should break above this line. Well, that's the perspective. And now let's have a look at the larger one. So this is the larger one, and I discussed it already multiple times, that this wave could be an ending diagonal of a higher degree. So far this wave has been impulsive. However, the question is about wave 1. So this wave looks like corrective at this moment, and also there are quite a few questions about impulsiveness of this wave, wave 3. Well, we'll see how it moves further. Now, speaking about GOD trust, it's technically the same as gold. So far we are seeing candles, green candles, daily and 3-day are bullish. The weekly is also closing bullish, and the monthly, unless it breaks down below this line, it will close with a bullish candle. The only concern that I have is GOD has been overbought like gold. Now let's move on to the next chapter of our discussion, and this is natural gas. Now, as we discussed yesterday, gas potentially formed an inside candle, which was also a matching low, which is a double bullish combo. So what we are seeing here is a very nice follow-up, and technically this candle is a confirmation of a reversal on the daily frame. If natural gas closes tomorrow with this candle on a 3-day frame, it will be a strong bullish momentum for natural gas. And obviously, after a failure of building a bearish momentum on the weekly frame, tomorrow weekly candle is very important, and so far it is tracking for a bullish closure to keep the bullish momentum on the larger frames. And this is our chart that we've been tracking for a week right now, over a week. We said that this is going to be a bottom of and the natural gas needed to keep this 3.778 level in order to keep the larger frames and larger waves intact. So far, it looks like it might find the bottom here and start a strong move higher. Well, if this becomes an impulsive wave, so far it is very young and it's difficult to say whether it's impulsive or corrective. Could be a diagonal, by the way. Then we would be looking for natural gas moving towards $5. Now let's have a look at oil. What we are seeing here is a very interesting closure today. So what is happening that oil is forming a doji, and this is going to be a bearish harami for this candle, or an inside candle with a very good chances to move lower, especially after this freshly made 50 by 100 days moving average cross. And the daily frame is also closing right now in 4 minutes, and it's interesting. I would love to see it closing below the high of the previous candle. It would be a double bearish move for the daily frame and for the 2-day frame. And we already know that weekly needs to close about 70.375 in order to make a bottom. Any failure, any closure below would be bearish. Speaking about the chart, nothing changed technically since we shared this chart at the end of December, when we said that oil is rallying here towards this target and now is moving down. So that's the perspective, and it is a bearish flag. The question is where it ends, and when it ends, then we will be gonna have a move towards this red rectangle. So far, the preliminary target about $60, but depends on when the flag will be actually complete. So if we have a daily and 2-day closure today with bearish candles, there is a very good chance of forming a top here. And for those who track long-term perspective for oil, this is a 3 months or quarterly chart for oil futures CL. What is happening right now? The chart is under the spell of this big quarterly MACD bearish cross, which is expanding, and the oil needs to rally about 12%, over 12% in the remaining 2 days in order to form a bullish candle. Anything below would be bearish. That's the perspective for oil. And now let's talk about the special feature of the day, wheat. This is the candle perspective. Let's start with candle perspective. Wheat is falling. Daily frame is totally bearish. At this point, I'm not seeing a reversal formation. If the weekly closes with a candle like this, it will be a bearish continuation tomorrow, and we will have a deep dive. The monthly candle most likely is going to be a bearish engulfing for this doji, and the entire formation is like a falling 3 methods. If wheat moves even lower, let's say about below 526 approximately, it will be a very strong falling 3 method confirmation. Another concerning development is on this quarterly frame, which is happening in 3 days on Monday. What I'm seeing here is that wheat is falling below the 100 quarters moving average, the purple line. And if it closes like this would be a very strong move. So it was the two previous moves were kind of stick saved here in July 17 and January 19. However, in most cases, this is a significant move, and it usually follows by at least 1 quarter or more of declining prices. This is something to keep in mind. And now let's talk about this one. This is probably one of my favorite charts. This is the chart that I crafted in August 2022, and this chart remains intact. So, and this was an amazing forecast. I said that with a good probability that wheat will end somewhere between 530 and 435 on July 2024, and this is exactly what happened. This is red line. This is July 2024. In July 2024, wheat hit 514. That's an amazing precision. And so far, we are seeing that wheat is trying to form a bottom, however, unsuccessfully, I would say. And at this point, considering the candles and everything, wheat has better chances to explore this red rectangle and move towards 435 or even lower. And that's I will explain in the next chart. So this is potentially a flag, a very significant one, that wheat formed in the next half a year, starting in May, practically a year. So this is the flag that right now can have a chance to be broken down. If it happens in the next couple of days and we see a weekly, monthly, and quarterly confirmation of this, this is the target for the next move. Somewhere in late 2025, we will see wheat moving towards 460 or 360 in this range. The ideal move would be towards 415. That's the perspective for the commodity. Now let's move from the commodity section into our stock market. And we will start with candles for major indices: SPY, QQQ, GIA, and IWM, representing obviously S&P 500, Nasdaq, Dow Jones, and Russell. What we are seeing here is very strong bearish candles. This is the 2-day frame. This is the 2-day frame. 1-day frame is not that convincing for some, but if we look at the 2-day frame, it's quite clear. So the indices are moving down. Even Dow formed a strong bearish engulfing, pushing below the support level 8 EMA, and Russell pushed it back below the 200 days moving average, which is practically 400 days in this notation. Now let's remind ourselves the 5-day candle closure, which happened 2 days ago, and this is what we are looking for in order to confirm a bottom. S&P 500 and Nasdaq needs to close above these outlined levels. If they fail on Monday, well, what I can say. And by the way, don't forget the 3 black crows that are very clean on Nasdaq. Now let's move on. This is the 15-day. This is the 15-day chart for S&P 500, and what we are seeing here is we have a MACD bearish cross, which is expanding right now after making it earlier this month. Now S&P is expanding it, and I'd like to emphasize that this cross is approximately 10% higher than the previous one. So if in 2022 S&P drop about 27%, so if we look for 10% higher cross, well, maybe it's reasonable to expect for 4,300 for S&P 500 in the next while, maybe in half a year or so. That's the perspective. That's the technical perspective. Now let's have a look at the candles for the sectors. So far, what we are seeing is we have a confirmation for financial, a confirmation for technology, and by the way, the technology sector is going to form, not today, tomorrow, is going to form tomorrow a 50 by 200 days moving average death cross. If you forget how it looks, this is the last one was made here in March 2022, approximately 3 years ago. And after that cross, the technology sector suffered quite a move downward. So this is the perspective right now for the technology. Healthcare sector is bearish. Technically everything is bearish except for consumer staples. Like I said yesterday in our market waves, I said that consumer staples are bullish. They are the only one who is going to rally today, and this is what happened. Everything else is bearish. Now let's have a look at larger candles, larger stocks, and this is the 2-day frame for most of them. So Microsoft, Amazon, Meta, Nvidia, Google, and even Tesla, they are bearish. Tesla needs a confirmation. Apple is somewhat neutral, so this doji can become a spinning top or a harami if there is a fall tomorrow, but so far this is somewhat neutral. With six larger stocks clearly bearish, I highly doubt we're gonna see a green market tomorrow. Now let's have a look at the Elliott waves. So this is a micro wave technically that we are looking since yesterday. This is the chart that I shared with subscribers late night on investingangles.com, and saying that this is wave 1, 2, 3, potentially wave 4 and wave 5. This was the map for overnight and today. And earlier today I discussed it again, so saying that there is a very good chance that this is a triangle and the final move, completion of wave 5, and now we are looking for an ABC. So this is exactly what happened. We have an ABC, and now I am very concerned because of the structure of this ABC. So technically this is an impulsive wave, and this is a correction for B, and what we are seeing here is potentially an ending diagonal for wave C. So if this indeed an ending diagonal and this hypothesis confirms tomorrow, it would be a very concerning development. So first of all, this is an ending diagonal itself, and from the perspective of ABC formation, this wave is truncated. So ideally it should move slightly higher above the peak of wave 1 of wave A, but it didn't, and we have a diagonal and truncation, a nuclear set for a move downward. And so far we are seeing very strong move down. If it continues in this way tomorrow, we might see a very considerable wave, and this wave is not gonna be bullish. Speaking about the longer-term perspective, this is the chart that we've been tracking, and if it indeed we have an impulse here, this impulse will extend, obviously. So this is wave 1, 2, potentially wave 3, 4, 5, somewhere here. So I'm not measuring it at the moment, just a very ballpark estimate. Most likely I will share setup and the targets in our daily update later in a couple of hours at investingangles.com. Well, that's the perspective for tomorrow and the beginning of April. And if we are looking for even a bigger perspective, that's what we shared with our subscribers way back in February, when we said that this is potentially an ending diagonal and this is potentially the target 51.20 for this move. So far, everything on track. Now let's have a look at Nasdaq. Nasdaq has even better and cleaner wave here. What we are seeing is either wave A, or potentially it could be even wave 1 if we consider this one as an impulse down. So what we are seeing here is wave, either purple scenario is going to play or the red one. I would say that considering latest developments, the purple one has slightly better chances. And even a ballpark estimate here. So this would be something like this. We would be looking towards these levels for the next wave, approximately. I will measure it with better precision and again share with in our daily update for the market. And the final discussion of today is Nvidia and what is happening with the stock, with the company. So far, we are seeing that Nvidia formed a doji, which could be bullish, could be bearish at this point. I would say it has a bit more bearish quantities and qualities, but again, it depends on the confirmation tomorrow. But if we look at the 2-day frame, the candle is clearly bearish. We have a very strong move after a build up of tiny candles, and this is indeed a move down. And if we look at the weekly frame, the weekly is looking for closure with a strong bearish candle below the 50 weeks moving average, which would be a confirmation most likely. And the biggest concern obviously is the monthly candle. If it closes below this purple line, which is a February low, it will be a bearish continuation, confirmation of the top. And if we look at the candles at the Elliott wave formation, this is our chart that we shared back in December. Cannot believe it was that far. And we proposed a new high, and after that we will be looking for a decline, and this was our target, 90.69. So far Nvidia moves towards this target, and it is potentially forming an impulsive wave, considering this wave 1 is a leading diagonal, wave 2 is a corrective, and wave 3 potentially could be an impulsive wave. That would be a very strong move. And finally, let's talk about TCMS. So just a few months ago, few members argued that TCMS holds about 2/3 of global semiconductor foundry market, and it has major clients like Apple, Nvidia, AMD, and whatnot, and it cannot move down technically. But well, candles had their say, and what we are seeing here is that so far, after many big bearish candles, TSMC is moving down, and if it closes with this bearish candle tomorrow, it's going to be even stronger bearish momentum. The monthly frame looks kind of ugly, and if we look at the quarterly frame, it is also a bearish engulfing candle, a strong one. If nothing happens in the next 2 days, it will be a big blow. And speaking about the chart that we shared back in January, when we said this is the target, this is the completion of ending diagonal, this is where we expect TSMC to be, and 133.57 is the target, and it holds so far. And if it hits the target, it will be a drop about 40% loss of the most recent top. Well, that's been quite activity-packed session. From volatility's whispers to bonds bold moves, from gold's rally to wheat's potential breakdown, today's market is full of signals waiting to be recorded. So what is your take? Are we watching the build up to a breakout or a calm before another storm? Drop your insights in the comments. Smash that like button, subscribe, and hit the bell. Share this video with your trading circles. And don't forget to visit investingangles.com for full analysis, charts, and free reader reports. For even deeper insight, join our private Discord, where Master Trader Kyle leads daily tactical calls on Nvidia, Microsoft, Meta, Apple, and more stocks. Until next time, stay sharp, trade smart, and happy trading.